Hello, Srini, and welcome everybody. It's a pleasure to be here to talk about the fascinating world of payments with Srini Kasturi. Srini Kasturi is a seasoned banker, having worked in cash management and transaction banking at leading banks across the world, such as Citibank, JP Morgan, Deutsche Bank, and Barclays. He's also worked at Western Union, and he is currently Group CTO at MoneyCorp. Apart from this, Srini Kasturi has also been an advisor to startups. He has founded his own fintech and he's also filed patents. My name is Tapan Agarwal and I run the payments product management function at Intellect Design Arena Limited. I've been with the company for over 15 years, currently based out of the UK office. It's indeed a pleasure to have you here. So welcome Srini and look forward to an engaging discussion on payments.
Thank you, Tapan. It's a pleasure to be here. Thank you for having me.
So let's start off with the first question, Srini, which is, over your career, how have you seen the payments industry and payments evolve?
I think you're asking me to give away my age with that question, but we shall stay clear of that and still try to answer that question. So the payments have really transitioned tremendously over the years. We went from 5-day, 3-day settlements into instant settlements at scheme level. That's one major transformation that has happened, and that's created an entire world of opportunities on how you would use payments as applications into embedded finance or even in treasury management. That's one. And the other is there's a technology transformation also happening at an end user level, which allows more agile treasury systems, a better and faster transformation to be able to use some of these innovations that are coming out. So it has to happen both on the supply and demand side, and that's certainly something that has happened over a period of time. I think there's also more transparency in payments, there's better data being carried, and certainly if it isn't currently, it is the desire of regulators to see better data being carried in payments. That's part of the ISO transformation. And then there's absolute blue sky, new technologies coming in like CBDCs, like tokenization and blockchain. So there's a number of, and a very wide spectrum of innovation and change that has swept across the payments landscape. It'll be interesting to see if the fintech revolution then follows through with a transformation of use cases as well.
Absolutely. I think that was a very interesting insight on how payments have evolved over the last 50 odd years. But talking of payments, I think retail payments and corporate payments are very different. We all experience retail payments in our day-to-day lives when we make purchases or do instant payment transfers or do a high-value payment. But when it comes to corporate treasurers and corporate payroll and corporate vendor payments, corporate payments are very different. You've worked for a long time in corporate cash management and corporate transaction banking. Would you like to share your views on how corporate payments differ and what are the key requirements of a corporate treasurer from a payments angle?
I wish I had a pithy one line to throw at you. In general, I think the challenge that banks are looking to solve for treasurers, and treasurers also express, is time and money. As you would know, we are all resource poor. So with the digitization and globalization of trade, we're seeing huge volumes pumped through systems, whether they're corporate systems or bank systems, and treasuries have had to adjust to that. There's a rise in cross-border B2C, for example. So all of this means that treasuries need to be really efficient because they're resource poor. If we're resource poor and we need to run an efficient treasury, we need payments that run on time, payments that run error-free, payments that are SDP, payments that carry the right data with them so that they're reconciled better on the other side, because every payment here is a receipt there. So those are fine principles. But they actually then translate into a next layer of value which needs to be built as propositions go, such as the connectivity for APIs, for example, uh, large volumes on host-to-host payments, file payments, STP validation of file payments, error management, auto-enrichment, auto-corrections, and repairs of payments. And then there's the whole insight piece that's making the most of the data that's now traveling with these payments.
Absolutely right, Shri. What we are also hearing in the market is that corporate treasurers are increasingly demanding payment factories, payments on behalf of, and they run shared service centers which pump payments on behalf of their subsidiaries. So the requirements of corporate treasurers from a real-time visibility of funds is more important than actually real-time movement of funds.
Yeah.
And their requirements are very distinct from retail payments.
Yeah, I think we've been talking about the real-time treasury as an industry for a while now, and the real-time treasury is not materialized. And a lot of that has to do with TMSs and ERPs being batch-based, availability of signatories, delegation authority across payment value chains and workflows, and indeed the leveraging of shared service centers. So all of these give rise to different challenges that treasurers need to solve for in order to run that real-time treasury, which is the nirvana.
Absolutely. It was great to hear the differences between corporate payments and retail payments. But thinking of a bank and your experience in the banking industry, when a bank is selecting a corporate payment platform, what are some of the key features that they should look for?
How much time do you have for an answer to that question? I think the challenge is at some level quite well defined, at another level quite fuzzy to define. And the reason for that is that there's a clear direction of travel when it comes to some of the client needs, established treasuries, the scheme changes that we anticipate over a period of time because of regulatory change. Those are well defined. And at the same time, there's a whole technology revolution that's creating new use cases, new technology estates that payments need to integrate into. So there's a solution to be done for what exists today, what is known, versus the flexibility to pivot into new applications. What I mean by the latter is certainly treasury transformation is everyone's focus, right? It's a job that's never done, it's never complete, and there are constant searches for new efficiencies that come out of the treasury processes. In order to support that, better data, we talked about this before, easier connectivity, low code, no code connectivity into TMSs. We've seen fintechs that focus purely on connecting banks and payment hubs into ERPs, and that's their only reason for existence. But clearly the reason they exist is because the need is important, it's there. So it plays into that low code, no code connectivity, which makes it easy to flip on high volume pipes into payment systems. The payment hubs that banks further need to consider have to cater to STP. They have to cater to auto repair, auto enrichment. These are all basics. And then we come into the more fun side of things, which is embedding payments into machine commerce, into apps, recurring payments, request to pay, and a whole set of use cases that drive those kinds of needs out of a payment solution. And finally, there is the leading edge, which is how can payments be tokenized? How can cross-currency and cross-border payments be frictionless? How can they carry the right compliance data with them that make them frictionless? How do a bank's payment systems straddle instant payments on both sides, create real-time cross-border instant payments? These are all considerations that I would have just at the top of my head without writing an RFP if I were in the business of selecting a payment hub right now.
So with a lot of innovation happening in the world of payments, Sri, and with your experience with banks and the banking industry, What do you see are some creative payment solutions being offered by banks to their client here?
That's an interesting question. There is always a desire to be innovative and be at the very cutting edge of payments from the bank perspective and from an established payment institution perspective. That's always challenging because of the regulatory overheads that typically eat up most of the budget before you start. Purpose of payments, weight protection system, split payments in Poland. There's quite a bit, right? And when you're done unpicking that, then you're ready for the creative solutions. Uh, there's quite a few, and a lot of them are being led by regulation. Interestingly, you wouldn't expect it. But if you look at CBDCs, for example, there's 130 countries that are working on CBDCs. There's 30 countries that are in some shape or form pilot, testing, launch spectrum of CBDCs. So what that means is there are about 30 countries where banks are eager to get their hands on a solution, find use cases, and start deploying them. Or at the very least, meet a regulatory obligation to connect to that CBDC. So that is one. But equally, CBDCs progressing at a certain pace with public consultations, etc., means that it leaves us open for innovation by the private sector, by fintechs. And we see a lot of that. There's tokenization in payments that's coming from the likes of Agior, Finality, Citi, and other banks have come together for the regulated liability network. So these are brilliant scale experiments that are currently underway. And part of that innovation muscle is built by participating in these because it teaches you not just about payments, but liability that comes from it, regulatory compliance that comes from it, client value that can be driven from being part of these experiments. So that's really important. And having the flexibility to be able to do that at low cost, agilely, fail fast, learn fast, move forward is key. So that's CBDC and digital ledger are just one side of it, right? What we also see are with regard to the value of data. Corporate treasuries churn out huge volumes of payments, and that generates huge amounts of data, which is traditionally sat in various parts of the banks or the corporate estates. Pulling that all together has become another holy grail in payments, creating insight and value. It helps clients understand their business better. It helps them sharpen not just their treasuries, but their client propositions as well, their pricing, and in some cases, even their resourcing. A lot of decisions can be driven from payment data that currently sits in various places. And we see that coming together at scale in simple solutions at the moment, such as receivables matching. Treasury management systems have built forecasting models. There is a whole bunch of beneficiary payment solutions that are being innovated on. There is tokenization of the beneficiary's data that itself to combat things like holding sensitive information. And those are the kinds of innovations that are coming into the payment space that will be truly transformative.
Absolutely. In fact, even smart contract based payments, which would get triggered based on certain events, would make the entire ecosystem that much more seamless. So Srini, real-time payments has been talked about a lot. We have over 70 countries offering real-time payment rails. In India, banks are processing over 2 billion instant payments every month. So the volume of real-time payments is skyrocketing. What do you think is the impact that instant payments and real-time payments will have on banking and corporate banking?
On banking in general, right? Consumer to business payments probably got the best shot in the arm possible during the COVID period, when cash went out of circulation or became less popular at least. And there were still tradespeople getting paid on the phone using instant payments, faster payments here in the UK. And UPI, of course, skyrocketed during that period. There is definitely a replacement of cash that is happening by instant payments in the retail market. When we think about what it means for treasuries, there is a limitation that presents itself in a number of jurisdictions where there is a limit on the size of transaction that can be processed on an instant payment rail. The other word of caution that comes in is fraud. Therefore, the processes that lead up to the payment, whether it's a collection of the payment data or the workflow that approves and releases a payment, these are things that need to be considered very carefully in invoicing the instant payments systems. But having said that, it's a huge opportunity to make things better, improved working capital. I've always believed, in fact, I heard it, it's not mine, I heard it from a treasurer to say a payment too late is expensive, a payment too early is expensive. So getting it just in time there and having a real-time treasury that manages that working capital in a very tight way is really valuable. Instant payments are mostly domestic except for SEPA, which allows for a cross-border within the SEPA zone instant payment facility. What we are going to see more and more of is banks and fintechs tying together instant payments on both sides, the send side and the receive side, in order to effect instant cross-border payouts. The great thing about instant payments cross-border is that it also becomes cheaper, and in a lot of situations with the right start and end points, fully traceable with acknowledgements both ways back. So that is of huge value in ensuring that your payment went in, it went without deductions, it happened quickly, near instantly, and it happened with the full acknowledgements coming back and tie back to the reconciliation that it was indeed paid.
Yeah. Absolutely right, Srini. In fact, in our conversations with banks, we are also picking up that instant payments require banks to have a payment architecture which is elastically scalable, highly available, and based on a MAC architecture, microservices, API, cloud agnostic, and headless. And we are also seeing banks demanding real-time funds control, wherein banks are able to check the balances across multiple accounts of a corporate, check limits at various levels, such as at account level, account group level, customer group level, and also check various types of limits like daylight exposure limits, overdraft limits, settlement risk limits, etc., so that they have good control on the payment as it leaves the bank, and it needs to leave the bank in real time.
That's brilliant. That is a number of new considerations that have come about from an instant payment systems that wouldn't traditionally have been there with a 3-day settlement.
So Srini, we spoke of real-time payments. I think another much talked about aspect in payments is that of ISO 20022. So bulk of the RTGS schemes in the world have adopted ISO 20022. Most of the critical market infrastructures are moving to ISO 20022, and SWIFT itself, come November 2025, will sunset the MT 1XX and 2XX messages and move to the ISO 20022 standards. What, according to you, is the impact of ISO 222 on payments, on corporate payments, and on corporate treasurers, and the value to banks?
I think the corporate treasurer of today has to deal with a huge spectrum of legacy file formats, and that in itself is like piecing a badly designed jigsaw together to form a picture. So the standardization of formats typically has been driven at a scheme level, and that's been on a best efforts basis. Treasurers and corporate treasuries have used ancient CSV formats where they haven't had an impetus to change, and then deal with truncation, deal with reconciliation issues, and deal with payment failures. So the ISO 20022 standard provides for a build once, deploy many times efficiency for the corporate treasury, because treasury changes are expensive. Treasury data is hard to make efficient in its flow across the entire value chain. So when it does converge onto a single format across many payment systems, which in effect it actually isn't, because there are subtle differences, although we give it the same label. But to a large extent, yes, let's say that there is this standardization, it offers the opportunity for a more efficient investment program in the treasury transformation. That's one. The other is the treasury process itself gets a huge uplift because of the enriched data that now flows through this format. The ability to carry multiple invoice numbers means fewer payments, and fewer payments means lower cost. There is also the advantage of structured data that now flows through a payment. So whether you're the receiving end of a payment or the sending end of a payment, there is a huge amount of data that now enriches the insight that can be derived from a payment flow. This can again inform business decisions for clients, not just at the treasury level, but across the entire business model.
Absolutely, Srini. In fact, in our conversation with banks, we see banks demanding creation of a remittance repository to store the value-added information that comes in a PAT 0088 or in an REMT 001 message, with possible potential to mine this information after anonymizing relevant data and to derive insights, like you said. So thanks, Srini. I think that was a very good discussion, and thank you for your time. Thanks, Srini.
Thank you.